Hello, good afternoon. You've tuned into your stocks on CNBC-TV18 and I'm Vinny Motiwala in the Mumbai studios. Let's look at what the market is doing today. From the day's lowest point, we've seen that recovery coming in for the market. So yes, Nifty is holding on to good gains as of now. Day's highest point is what the Nifty is trading at, 24,200. That's what it is. And sudden spike that we're seeing coming in for the Nifty 50. So, let's just take a quick look at what are the ones that are actually pulling up the market today. We have Ultratech Cement, if you could pull that up. Reliance Industries is doing well, up 1%, as well as M&M and Infosys are among the gainers, and Grasim Industries coming in from the cement side, which is managing to hold on to gains. We've seen a sudden spike up that is coming in the market in just the past few minutes. So 24,200 is what the Nifty is holding on to. Nifty mid and small cap, that today has been outperforming the benchmark indices. So interesting to watch out for there as well. So Nifty mid cap holding on to gains of around 0.6%. Small cap also is holding on to gains of around 0.9% in trade. Nifty Bank, that's the one that's not anything interesting today or participating in this up move that we've seen coming in today. Nifty Bank in at the red as of now, so keep an eye out on that. Look at the pullers and draggers, right? That's what we're seeing on the screen as well. As of now, for the Nifty Bank, we're seeing ICICI Bank, that's doing well, Bandhan Bank, IDFC First Bank. While in terms of drags, we have a lot of names coming in, IndusInd Bank, Kotak, Axis, SBI. So that is why that Nifty Bank is seeing a sharp decline coming in and not participating today in the market as of now. A lot of individual movers that we're seeing coming in from the cement side. We did see Grasim Industries coming in terms from the move coming in from Cement Pack in the Nifty 50. But other than that, we also have something like a Shree Cement, JK Cement, JK Lakshmi Cement. All of them are managing to hold on to gain. But we do have our experts who are joining in with us to solve all your stock-related queries today. So let's bring on board our experts. We have Astha Jain of HEM Securities joining in with us. And we also have Ashish Kyal of Wave Strategies Advisors joining in with us to solve all those doubts that you will be having. So thank you so much, Astha, as well as Ashish, for joining in with us this afternoon. It's always a pleasure having you both on the show. I'm going to start with the first query for today. We have Krishna, who's writing to us, and he's holding around 1,000 shares of Adani Wilmar at a price of 350 rupees per share. Wants to know whether he should continue to hold this for the next 3 to 5 months or look to sell at the current levels, making a loss as of now. So short-term query coming in. Ashish, let me take it to you first. Good afternoon.
Good afternoon, and all the viewers. If you look at Adani Wilmar, we can see there has been some selling pressure post the news and the event. The stock has managed to bounce back sharply from the lows of around 275, 278 levels. So I would rather hold on to the stock here. There can be some consolidation, volatility expected, but we can see the stock moving back towards the 350, 360 mark on the upside, and one can maintain a stop loss on the stock, which is going to be approximately far away, but around 285 levels. So if I can maintain 285 levels, we can expect 350 or higher targets on the stock. I would recommend to hold on from here on.
Okay, hold on from here on. That's the word coming in from Ashish. But Astha, on the fundamentals, what is Adani Wilmar looking like? For the short term, is it advisable to hold or maybe just book out profits and switch to some other FMCG name? Good afternoon as well.
Good afternoon. So talking about this counter, in the short term, I would advise to book the profit and exit from this counter. Now, the reason being is that although we have seen strong volume growth across these segments like food, FMCG, edible oil, but what is major disturbing element right now is about the uncertainty related to Bangladesh. So we have seen that uncertainty impacting the company's financial. So that is one of the major point. And we have seen, in fact, their food margin segment has also seen some sort of contraction due to inflationary pressures. So I think in the short term, due to these geopolitical uncertainties, maybe we will not able to see a upward price momentum in the counter until the Q3 results come. So my idea here is just for short term, maybe here the time horizon can be a month or so. If the time horizon is such, then exit from this counter. However, if the time horizon is longer duration, then remain invested in the counter.
Okay, long term, then you can remain invested. That's the word coming in from Astha. Let's move on to the next query. The query for today is going to be on the stock is Vodafone Idea. We have Rajesh, who's writing to us from New Delhi. He's holding 8,000 shares of Vodafone Idea at a price of rupees 9 per share. Vodafone trading at 8.31 currently. Wants to know whether continue to hold this or look to sell. What's the advice on this one? Astha, let me take it to you first. Advisable to hold on to Vodafone Idea or maybe look at any of the other players in the telecom space?
So I think it's better to hold on the counter, because I think the kind of plans this company is having, maybe we can see some sort of uptick in the price momentum, and the stock will give the higher levels to, exit from this counter. So, and here the cost price is at around 9 rupees. So it is a better choice to remain invested rather than booking losses at the current juncture. And the kind of news flow which we are seeing over last few days, I think that is also helping the company in showing the positive financial performance going ahead. So I mean, all in all, it's a better idea to stay invested rather than booking losses. So we are recommending a hold on this counter. However, our price target is at present point of time is at around 9 rupees only.
Okay, price target is 9 rupees as of now. Ashish, on the charts and technicals, Vodafone Idea, how is that looking like, right? Because in the last 1 month, we have seen it fall, then start seeing a recovery again midway through that as well. What is the chart indicating?
You're absolutely right. If you look at Vodafone Idea, we can clearly see the stock went all the way on the upside towards around 18, 19 rupees, corrected sharply from there, made a low around 6.5, 6.7 rupees, trying to bounce back from there. So there is a lot of volatility, and we have not seen a secular up move. It has been since months and years that the stock has been moving in that range, and a lot of volatility. Having said that, I think over short term, the stock can move towards the level of around 9.5 to 10 rupees. So one can continue to hold on, because we saw some kind of a 4 to 5 days back, we saw a gap up opening and it's sustaining there. So technically there is a short term bounce back for sure. So we can expect a target of around 10 rupees over near term. And on the downside, one can maintain a stop loss of around 7.5. But if you want to extend the time horizon to 1 year or 2 years, I would be recommending to be out from something like an Idea, and Bharti Airtel looks much promising from that perspective.
Okay, long-term Idea, Bharti, other than Idea, you could look at Bharti Airtel also, that is coming in. But let's move on, and the next query is coming in to us from Karan, who's writing to us from Thane, holding 1,100 shares of Ola Electric at a price of 90 rupees per share. Wants to know whether to hold or sell this counter. Astha, we've had a lot of viewers ask on Ola Electric as well, because since the listing, not everyone is doing quite well in terms of the move that has come in for Ola Electric. So Ola Electric, what should the viewer be doing now? They bought it at 90 rupees per share. Continue to hold this or sell?
I would recommend to hold on this counter. The reason being, first of all, the new product launches which this company is doing, I think that will be helping the company showing good performance going ahead. In fact, the power pod which they have introduced, I think that is also helping the company in showing a strong performance going ahead. In fact, the results which they have posted were also decent, because what we have seen was the rise in the top line, and that was due to the strong volume growth. So I think on all these bases, in fact, their gross margins are also steady. So I think, and now the company is really looking to fix the customer issues which they are getting, complaints which they are getting. So I think all in all, it is well poised to show further upward momentum from here, recommending a hold with a price target of 100 rupees to 110 in the longer term.
Oh, wow. That's a nice one. 100 to 210 in the long term. Okay, that's the fundamental. There's a lot of announcement that is coming, and they're working towards that. Ashish, on the charts, Ola Electric, I know it's very less for you to, because it's a recent listing. But any word on Ola Electric?
Yes, if you look at Ola Electric, the low formed was at around 66.80 odd levels, from where we saw a very sharp recovery on the upside. And the good part is that it started from 22nd of November onward, the stock has shown a very good move, so which shows an impulsive rise, and that looks like it can start the next wave on the upside, which can take the price towards 120 levels. So I'm optimistic and bullish on Ola Electric over short term to medium term perspective for 120 as the target, and one can maintain a stop loss of today's low, which is going to be around 82 levels.
Okay, keep an eye out on those levels for Ola Electric over there, coming in from both our experts for today. Moving on to the next query. Today, the next query is coming in on Paytm. Now, Priya Kumar is writing to us from Madhya Pradesh. 460 shares of Paytm is what they're holding at a price of 690 rupees per share, making a profit in this one. So she wants to know whether she should continue to hold or maybe book out profits. Astha?
So this is Yeah. Now, talking about this counter, I would recommend to partially book profit and partially hold the counter with a price target of 990 or 1000 odd levels. Talking about this counter, we have seen their results were good, but monthly transacting users are still showing a decline momentum. So that is the major thing right now, although we are expecting that MTU to be revived in coming months. And in fact, their results were okay, because we have seen their EBITDA loss was reduced due to strong cost management done by the company. But I think now the price has already shown all these positive. So there is not much upside left from here because we have seen stronger momentum already. So idea here is partially book profit and partially stay invested with a price target of 1,000.
Okay, partially book profit, partially stay invested. That's the word coming in from Astha. Ashish, what is your take on Paytm? What should the viewer be doing? Should they book out profits or continue to, like Astha is saying, part profit booking and part continue to hold?
I am in sync with the Astha's view completely because we can see that stock has shown a very huge run up over since April onward. The low was around 300 odd levels and the stock has more than doubled on the upside, getting good levels at this. So it's best to book partial profits, get something off the table, and for the remaining position, maintain a trailing stop loss method. Use that as a trailing stop loss method with a level of around 810, and I would recommend to keep trailing it with a 5% stop loss so that in case the stock continues to rise, you are in the trend and continuing to be moving on the upside. So 810 is the current stop loss and keep trailing it with 5% as the stock moves higher.
Okay, that's a word coming in on Paytm. But on that note, we're going to slip into a very short break. After the break, we'll be solving more of your stock-related queries, so don't go anywhere. Welcome back to your stocks on CNBC-TV18. We still have our experts with us, Astha Jain of HEM Securities, as well as Ashish Kyal of Various Strategies Advisors, joining in with us to solve those doubts that you'll have on all your stocks. Next query we have is coming in from Nakul Gupta, who's writing to us from Punjab, holding 15 shares of Coal India at a price of 400 rupees per share. Wants to know whether he should continue to hold this, maybe look to switch to other counter, or what should they be doing? What should be their strategy? Making some bit of a profit here right now. Ashish, let me take it to you first.
See, if you look at the overall trend for Coal India, I think the stock showed short-term correction, but I would be still bullish. Having said that, because the stock on 4th of June made a low around 5th of June, which was post the event election, made a low around the levels of 410, 405, and from there it is again showing a bounce back. So the overall price action support area is still protected. I'm expecting the stock to move towards the level of 450 on the upside over near term, and one can maintain a stop loss on the stock around 410 levels.
Okay, let's move on. And Astha, what's your view on Coal India then?
So recommending hold on this counter with a price target of 455 to 459 or 460, we can say. Now talking about this counter, the company has aimed to produce 1,000 metric ton of coal by FY26. So that is a strong ambition, ambitious target which this company is having. Another point which is really making us optimistic about this counter is that now they are expanding their product portfolio, like the coal gasification project, which they are doing in joint agreement with GAIL and GAIL. In fact, they have started investment in the thermal power generation also. So I think all these investments will definitely help the company in showing stronger performance in the coming future. So we are positive on this counter, recommending a hold with a price target of 455 to 460.
Okay, 450 rupees per share is a target coming in from Astha on Coal India. Keep an eye on that. Let's move on to the next query. This query is on Asian Paints. Now, Devdas is writing to us from Bilai. He's holding 110 shares of Asian Paints at a price of 310 rupees per share, making 3,100 rupees per share, I beg your pardon. And they're holding it since 2021, so it's clearly a long-term holding that they're there. But right now, they're making a loss on this one. The stock is trading at 2,400 rupees approximately. Whether they should continue to hold this or look to sell, Astha, what's your take on the fundamentals for Asian Paints?
So recommending to hold on this counter. First of all, would like to give the price target, which can be set at around 2750 to 2800 odd levels, although cost price is higher. But I think in the longer term, we can see those levels also. So longer term here means maybe time horizon can vary between 6 months to 1 year. Now talking about this counter, although we know kind of results this company has posted, but now we are optimistic on this counter because of the wedding season and the government capex that might start, and that will be helping the company in H2 of FY25. So we are expecting H2 of FY25 to be better than H1 of FY25. In fact, one important point is that company has taken the price hike of around 1.2% in the last quarter. That is Q2 of FY25, and that was a partial impact which we have seen in the results. So partial impact can be seen in the Q3 results as well. So that might also act in a positive way for the company's financial performance. So all in all, recommending a hold. Initial price target we are limiting to 2750 to 2800. But here the cost price is high, so it might take another 6 months to 1 year to come at those levels. But there is no harm in holding the counter, at least not booking losses at current junction.
Sure. Okay, and Ashish, on the technicals, what is the word coming in for Asian Paints?
See, if you look at Asian Paints, post there was a big gap down that we saw around the date of 11th of November. The stock is just consolidating in a range. But if the time horizon is long term, at least for say 1.5 to 2 years, I would recommend to continue to hold. This stock has been in a secular bull trend since decades. And this kind of short term headwind should not be the reason why someone should book out of Asian Paints. And rather it is an opportunity to keep accumulating the stock on any kind of a dip. So my recommendation would be to hold on to the stock here. On the downside, the support for the stock, price action support for the stock comes to around 2,150. And on the upside, once the gap area gets filled around 2,700, we can expect it to move sharply upside and again to the upper end of the range towards 3,300. So hold on for the medium term to long term targets for 3,300 and higher, and buy more on the dips.
Okay, buy more on the dips. That's a word coming in from Ashish. But that was the last query for today. So thank you so much, Astha, as well as Ashish, for joining in with us and solving all our viewers-related queries on the stocks. Thank you so much for that. But a quick look at where the market is at, because when we started the show, it was at the day's highest point, 24,200, now 24,250, comfortably holding on to that mark. Up 0.5% in trade right now, also trading at the day's highest point. So there's no complaining about that. A lot of Nifty 500 names in the smaller cap that's seeing a good move as well. Look at Intellect Design Arena. We had Happiest Minds, Castrol India. All of them are managing to hold on to gains. But with that, we are absolutely out of time on this edition of Business Lunch on CNBC. I beg your pardon, your stocks on CNBC TV18. Thank you so much for tuning in. Next up, we have a closing bell, so don't go anywhere.